Well, good afternoon. Good afternoon and welcome to another Webinar Wednesday, hosted by the Cal State Bakersfield Small Business Development Center. Good afternoon. I'm your host and presenter today, Kelly Bearden. And this is going to be Webinar Wednesday number 351. 351 in a series that started back in January of 2013. Today is July 9th, 2025, and we're going to be talking about some of the things, 5 things in particular, that you should review, at least in my opinion, at mid-year. And we are at mid-year, halfway through 2025. Hope business is going good for you. Let's get things going. Hopefully your 2025 is going well, but we're going to go through and go back and take a little bit of a look and see what's happened the last 6 months. And I know we all started 2025 with some great ideas and some great ways to improve our business, to go into business, to expand, etc. And we're going to look and see how those plans are coming along right now. So we're going to do our mid-year kind of check-in, mid-year check-in for 2025. And I'll show you my 5 things to review. That's what's important to me. But you know, what's important to you is also extremely important to all of us. So our 5 things, my 5 things to review are the 5 things that I think that are important to look at mid-year. We'll jump into a couple of things such as our economic corner. We'll kind of encapsulate it into our 5 things, our economic corner, because the economic situation is kind of important on what's going on globally, nationally, in the state of California, and even locally. So trends that we're seeing from an economic perspective are important, and we continue to look at that to recap the first half. We'll look at some of the news and information and resources that are going on today and, are going on around this time. Some of the things that are popping up today, we're seeing potentially another competitor to the FICO score. The FICO score is used in a lot of different small business lending programs and all kinds of business credit programs for consumers. And today, for the first time, they're starting to use the Vantage Score 4.0 as a competitor to the FICO in mortgage retailing, in mortgage loan applications in order to find out the creditworthiness of people applying for mortgages. So that's in the news today. Also, we're looking at diesel supplies getting a little bit light and supplies are getting thin. That has the potential to either raise diesel prices, make it much more scarce, and increase the cost of transporting your goods and services or the goods and services that you need transported to you. And then also, how can we get out of the news of the day without talking just a little bit about, what's going on AI-wise and some of the AI fights that are affecting some of the news today. So a lot going on in news. We're going to have more news as we go and more information. We're going to have the resources that helps you thrive. Our producer, Maureen Busher-Dang, is here, and she will be working the back end of things, supplying the chat box with valuable information and resources that I mentioned. We're going to be covering some of those in very small detail and want to just kind of put the resource there for more information for you to jump and grab if you are interested. So news, information, and resources that help you thrive. We'll talk a little bit about on the side of capital, just a little bit of capital quarter today that's kind of ingrained. It is, what we're going to talk about is not a recent SBA change, but if we get a chance, we'll mention some of the SBA changes that are going on in the funding side of things with capital quarter, or we might just defer that to an upcoming segment of Webinar Wednesday. Our life well lived returns soon. We did kind of have a business memoriam, so to speak, in our last webinar on Fred Smith. We will have a poll we'll get answered to today and to get by with just a few poll questions and also answers to your questions. Any questions that you have, please go to the Q&A box and put them in there. Following today's presentation, we will jump in and answer any of the questions that you have on the material that is covered today or other questions that you might have. And the resources will be there in the chat, as we mentioned, and we do have a poll today. And, I'll jump to this poll in just a few minutes. First, let's get going on today's things, and the 5 things specifically, the 5 things that business owners should review, in my opinion, your director of the SBDC, Kelly Bearden, at mid-year. And number 1 is the first thing you should review is your plan. Now, I understand how I hope small businesses plan. And I would like to see small businesses do a lot of planning that actually use business planning, strategic planning as a resource to grow your particular business. I've probably mentioned this before, but it's all too common for small business owners to use the planning process in order to kind of fill an obligation to try to receive some type of funding. Maybe it be bank funding or SBA funding or other type of business loans or other type of business and financial acquisition. So maybe you're trying to attract a partner, a strategic partner. Maybe you're looking for an angel investor. Maybe you're looking for a lot of different things. Maybe you're even doing a Kickstarter campaign. God bless you. But really, what it comes down to is the particular plan that works for you. It's not the plan that works for me. It's not the plan that works for a lot of other people who you will engage with in your small business journey. But it's that plan that works for you. And oftentimes, some of the best plans I've seen are the most informal. They're the ones that are written on the back of a 3x5 card or the scrap notes that you keep in a folder or that nice meticulously handwritten book that you keep with all the information on what's going on in your business for those of you that are so well organized. But whatever it is, it's a plan, and it's a plan that works for you. And that is the plan that works best. Maybe your business plan came out of, a long, hot shower that really felt good on those aching muscles and joints. But maybe it was just a couple of things that came to you during that shower and things that you could implement. But however you like to plan, it's important to try to now look back to the first part of the year to when you actually really had a plan. It might have not have been it might not have been a New Year's resolution for your business. It might not have been even something as formal as you had written down, but maybe you came up with a few ideas that you might want to try in 2025. Well, now's a great time to go back and see how that has worked out in the first half of 2025. So your plan, very well could be different from how I like to plan and how I hope you plan. But however you plan is important to you and important to what you do. So on that particular plan, many of you probably know our business planning platform here at the SBDC is LivePlan. And I'm not going to jump into, you can go to our YouTube channel and see plenty of instances where we have talked about LivePlan and talked about how it has been an important factor moving forward for a lot of businesses. It has evolved like other forms of business planning. It has evolved in actually the application of using AI, which I think is good for idea generation and coming up with ideas and jumping into it. But really, LivePlan is really good for kind of getting you to look at all aspects of your particular business. Again, when we talk with businesses on LivePlan, there's a large percentage of you that will use our free LivePlan as a point to actually work on your business plan in order to meet maybe a funding requirement. You know, banks usually, when they're looking to finance small businesses and other lenders, they're wanting to see what your plan is. They're wanting to see on paper that you have a well thought out plan in order to, number one, make yourself money and pay yourself, but to pay them back as well. And so really, we see LivePlan, and with many of our advisors that use it very effectively, we see it as a great resource to small businesses and a great way for small businesses to plan. Now, of course, it isn't the only other tool and other plan that we have. We have a lot of different tools in our toolbox. You might have seen this slide before, but it really shows a lot of the different resources that are available for you at the SBDC. I guess we should have a picture of some of our seasoned advisors and professionals that do provide the no-cost, confidential, one-on-one advising, but you only get the red subtitle up there for that. But you see LivePlan as one of the tools, but there are other planning tools that are in here as well. You can go into our YouTube channel and you can find a generational transition plan that was done by Morgan Clayton, the founder of Teltech Security Systems. And Morgan went back a few years ago, or it's about a year and a half ago, and went back and detailed how they did a generational family exchange of authority within Teltech, to where they came up with a generational transition plan in order to pass the torch to the next generation. But when Mr. Clayton was on and provided us his template that he used for coming up with this, which was a very valuable template and not very easy to find. It does work great in family businesses that are transitioning, but it works great for all businesses that are transitioning. We're looking right now at a lot of businesses, a lot of business owners who are looking to sell and retire and to move on. We're seeing a lot of these businesses. And really, there's a lot of business owners that are not prepared to sell their particular business. So maybe looking at the transition plan and maybe looking at getting in front of actually planning to sell your business is really great, great planning. A lot of people wait till it's too late, and I wish they wouldn't, but they do. They wait till it's too late. And there are other buyers out there that would view even a business that potentially isn't making money at this point as being a value. And the generational plan from Teltech and Morgan Clayton that we provide at the SBDC upon request is one of those tools that we use. We also talk about, if you know me, I like my finance and I like talking finance. So we talk a little bit about, our capital access form, and we talk about a little bit of our capital cash flow forecast form. And really, one of the things that I've always seemed to preach and really will never not take the opportunity to do so is to talk about the value and the importance of planning and forecasting your cash flow. And being able to do that is really helpful from the standpoint of you're getting your best information forward and you're seeing basically what your results for your business are going to be over the next 6, 12, or 18 months. Now, of course, it's just a forecast and you're just projecting based on the assumptions that you have today, but listing those assumptions on how you see your business going over the next 6 months, how you see sales coming in, your expenses, and how the assumptions you use for sales. A lot of them are really easy for both sales and expense. You use historic information for sales, and maybe you're adding a new product line. Maybe you have a new location that you're thinking about acquiring. Improving cash flow can be simply from buying one of those other businesses we were just talking about that are looking to do the transition plan. But really, cash flow forecasting and it's just another way of planning the financial side of your business. One of the other things before we leave here that is, I think, a good planning, if you go up into our far left corner, one thing that we don't see enough people doing is planning the risk side of their business. And really, the risk side of their business is more about just purchasing insurance. Sure, liability insurance and property insurance and renter's insurance for your rental space, for your commercial real estate, and so forth. And other forms of insurance are very valuable for your business. But we all know that these have dramatically increased in cost. And really, there is a managing aspect, a planning aspect that can be done to reduce the risk that you have and also reduce the cost for that. When we talked about Morgan Clayton earlier, I think he was on about a year and a half ago, or maybe last year, since he talked about the transition plan. Guess we need to get that guy back. And he talked about the risk management field book. And it'd really be nice to go back into that and look into this document that is out of print, written by former, actually SBDC advisor emeritus John Pryor. John Pryor wrote a fantastic book that is a field book, and it is not a textbook. It's to be used in the field with businesses on quality risk management. But really kind of doing a plan for your risk management is another plan that I would look at. So utilizing any or all of those tools is pretty super. There is one of my favorite bills. And the second thing that I would plan for is we just had a huge new piece of legislation called the Big Beautiful Act, HR1, the Big Beautiful Act. And of course, the Big Beautiful Act is called also the Big Beautiful Bill or the Big Beautiful Bill. And so when I think of big beautiful bills, man, there's a gorgeous bill. That is a gorgeous bill, which is going to actually have me pause now and jump to our poll questions, because our poll questions are going to be pretty much my interpretation of that big beautiful bill that I just showed you. And it's a little whimsical today, a little fun. We're having a little fun here today. So let me jump into a three-part question about number one, the $100,000 bill. And so here's the first question. True or false? The $100,000 bill was illegal for individuals to own and possess. True or false? Our second question is, which president is on the $100,000 bill? You saw his picture there. I know you know who it is, but which president? Is it Woodrow Wilson? Is it William McKinley? Is it William Howard Taft or John Maynard Keynes? So last question is question number 3 is, what is the value of a $100,000 bill today? And one of my questions might have been, and maybe one of your hints, if you haven't answered yet, would be, it was only published and actually printed for 2 years. And those were the years 1934 and 1935. So a couple of questions here is, what is the value of the $100,000 bill today? Is it worthless? I mean, potentially you can't even own or possess it. Is it $100,000 face value at that note? Is it 208,725, which is inflation adjusted $100,000? Or is it $2.376 million? So there's the 3 questions that I'd like you to look at. If you jump in and want to answer those, we'll give you another second or two, a few seconds. We have 37% of you participating in my whimsical $100,000 bill question. I mean, come on, how many? Don't Google, come on. I think that might be why some of you are pausing. You're hitting Mr. Google on this, aren't you? Don't do it. Don't. Okay. Last chance to get in, 43% of you participating. My poll question is turning into one that you don't want to answer, but there you go. Mr. Google sounded, and we have 56% of you. I'm ending the poll and sharing the results with you. And the correct answer to, is it illegal for it to own and possess? It was true. Yes, when the bill came out, it was only for a few select financial institutions to help facilitate actually, getting the books straight. So it was basically accounting and record keeping bill for 2 years in 1934 and 1935. It was at one time, so this is kind of a tricky question. It was at one time illegally to possess when the bill was actually being circulated, but probably not now. So 67% of you thought William Howard Taft was the president on the $100,000 bill. And I have to tell you, you're incorrect. Going back to that bill, as you see right there, or maybe you don't see, but that is Woodrow Wilson. And 11% of you got Woodrow Wilson correctly. William McKinley also got voice. Sir John Maynard Keynes, the economist. So sorry, Mr. Keynes. And also, number 3, what is the value? The value of the bill, 56% of you are correct, is nearly $2.4 million for those So go out and find yourself a $100,000 bill and make yourself very happy for doing that. Okay, so that is the $100,000 bill poll questions for today. But really, one of the things that you really need to look at is how this bill is going to impact you. Enough fun stuff about the big, beautiful bill, but how's it going to impact you? So obviously, that would impact you greatly if you could find one of those. But really, the effect is going to be both tax and spending by the government. And so, first of all, what it does is one of the most important thing this bill does, and really what I'm asking you to do is to take the next 6 months and to have an advisor meet with you on the provisions of this. Really a good time to do some tax planning earlier than later this year, and really to look at how it's going to affect you. Many of these provisions are those that are already in place from the 2017 tax bill. If this bill would not have been passed, then those provisions would have gone away, and it would have been a steep increase for particularly small business owners in that particular 2026 tax year. But this kind of staves it off. You might have seen that we were showing some lobbying by the NFIB, the National Federation of Independent Business, who really was solidly behind trying to get at least the tax benefits of this carried on, and they are part of it that will carry on. So some of the things that are most likely and very popular in this particular bill is there was the small business section 199 QBI deduction, where there's the 20% pass-through deduction. There's going to be expanded eligibility, as you see below. Professions like doctors and consultants and attorneys that were previously phased out may qualify now. Again, I am not here giving you tax advice. I'm just trying to show you some of the things that are happening in this legislation to encourage you to go get some real good help from a real good tax professional. I am not a tax professional, although at one time in my life I might have been. So, but really, that ship has sailed. Get good tax help and find out more information on the particular HR bill effects on small business owners. And some of those are going to be kind of a income band system, kind of phase outs with gradual reductions, offers more predictable tax planning for pass-through entities. Pass-through entity being those that are not sole proprietors, where basically the income passes through either an LLC, a partnership, a S corporation, or even a C corporation. One of the big things that we're hoping that this bill does is offer some relief for food businesses, particularly restaurants, that have been impacted by tips. So tips received by employees may be non-taxable to employers for payroll tax purposes. I know you restaurant owners out there, you've told me, I'll just say 100,000 times that you're not happy with having to pay taxes, pay taxes on tips that are received by your employees, and then also having to pay the credit card premium of 2 to 3% on those tips as they're mainly left on credit cards. I hear you, and hopefully this will provide some relief to those businesses. We see a potential benefit, particularly with restaurants and salons and hospitality businesses that have a high number of tipped employees. And also that bonus depreciation that we talked a little bit about is extended through 2027. One of the longtime stalwart deductions for businesses was the Section 179, which was the immediately expensing of assets. That is where you would go on in December and purchase maybe a new delivery vehicle for your business. I'm not talking about a luxury car for, the owner or their spouse to drive. Although if there's a business purpose, I'm sure your accountant can talk to you about that. But it allows up to 35 million in revenue to be used for cash basis accounting. So that's one thing that really helps out as well, because there used to be a limit. There's the two types of accounting. There's accrual, to where you use accruals and accrue revenue when it was earned, in the period when it was earned. And revenue is actually recognized when it is received in a cash basis accounting. and changing between the two isn't permitted on an annual basis. So there's some increase in the deduction limit there. So there's some changes that are coming there. And there are so many other provisions that I really didn't want to talk too much about taxes, even though I've talked about more than I wanted to. But really, SALT is, no longer the Strategic Arms Limitation Treaty. Now we have a new acronym for SALT, and it's not table, C, or kosher. SALT is now the state and local tax deduction. And that is in this provision, whereas residents in high state and local taxes, income taxes in California, not so much as far as property, at least in most cases compared to other states. But obviously that there's some high income taxes for higher income individuals in the state of California. So that could be something of a potential deduction for profitable, very profitable small businesses. Other provisions, there are the reduced green energy credits, which unfortunately, in my opinion anyway, might discourage green upgrades. But there's going to be still things that go on at the market level. And if it makes market sense, we're going to still see a lot of these green upgrades happen. So some of the key takeaways are, broader access to some of these deductions, some of the languages. You really get into a lot of the nuanced stuff as far as tip deductions. There are a limit up to maybe 25,000. I'm not going to go through all this, but just know that there's a lot of things out there, and there's a lot of these provisions that are going to pertain to a lot of individuals, and it is best to get in front of these now. And of course, talk to an advisor on those things. So the big, beautiful bill, as it's called, also has a few other small business boosts that we'll talk about. And that is that there's considerable government spending on this, on defense, ag, and border security. So if you're a business that can actually look into the defense side of things, or maybe potentially, our region is one of the greatest agricultural regions in the world. And also the southern part of the state with border security, there are opportunities for small businesses. So the opportunities could also come on that side of things as well. So there's two of the five things that I would look at. I would look at my plan, my business plan and strategic plan. And just to let you know, on number one, as far as the plan aspect, we did look at our SBDC strategic plan. The SBDC is like a business, and we advise people and we run this thing or try to run it like a business. So yes, we did the last week in June actually work on our local strategic plan that we're implementing for the next year. And so we looked at our plan and really had a nice half-day meeting with our some key stakeholders and key members of our team, and really talked about the direction of where we hope to go. So we check the box in number one. Number two, as far as the big beautiful bill, I researched it for this webinar. How about that? So as far as the tax and spending, that is with the big beautiful bill, really know your taxes and understand that there's going to be resources out there for some government procurement on the defense, ag, and border security. So those are the first two. So how could we get through my five things to review at mid-year if I don't get into somewhat of a financial review? So, and I'm trying to do this on a limited basis because I very much have the capability of, talking about this for an entire hour, and I don't want to do that, and I know you don't want me to do that. I think we have some great resources that are coming up, some new tools and new programs to help with the financial review side of things. Maybe these were uncovered in our planning just a couple of weeks ago. So that is the first thing I want to say, is that there are a lot of tools out there for doing a financial review of your business. And I want you to know that what I think is important to do a financial review in your business, like the planning aspect, maybe is something that's not important to you. But there should be some financial key statistics that you can use as benchmarks, that you can go back and you can analyze to just see how profitable your business is, how your sales are doing, your customer base. There are some things to really check in on a fairly regular basis. What are important to you? Maybe it's acquiring new customers or clients. Maybe it's retaining your old ones. Maybe you have a few key customers and retention of those customers are absolutely financial number one priority. So I guess what first of all is what I'm asking you to do is think of the things that are important for you to be able to review on a financial aspect. I think if we looked at the standard side of things, we would look at your financial statements, going in and looking at profitability from, say, the first 6 months of last year compared to this year, and compare how it was for basically the same time period of last year. Looking at any changes that might have occurred. There's so many things that we could get into on the financial side of things, but they really do begin with the financial statements. And by financial statements, we're generally talking about your profit and loss statement. We're talking about a balance sheet. And for me, that wonderful cash flow forecast. But also, another thing is, many of you know that we've talked quite a bit about is our exciting new tool called Vertical IQ, which has got financial information on your entire industry. And not only does it talk about your industry trends and industry information and where your industry is going, but it also talks about a lot of the key aspects of your industry. It talks about the compilation of financial statements of businesses in your particular, SIC code, your standard industry classification code, your NACE, which is your national code. So really breaking it down to that 5-digit code for how you operate, what business you operate. It's on your tax return, your Schedule C if you're sole proprietor, on your other forms. But that code is very important for jumping in and kind of looking at what you have and where you can go with that. So really looking at the vertical IQ and plugging it in and seeing how you compare to your particular industry. A couple other things I'm going to just talk about on the financial side of things that are kind of things that, I don't talk about enough. And when we get into, and this also checks the box for our capital quarter this week, but really understanding your financials and moving forward, I like to at times have people look at the valuation of their business. What do you think your business valuation is worth? And yes, vertical IQ does an excellent job of doing a vertical business analysis for you, doing an analysis of what your business is worth according to their measures. I can put together, 5 or 6 different professionals, and we can get your CPA or your accountant. We can have a law person. We can have a valuation specialist, somebody who works in that particular field. We have a few SBDC advisors that are fantastic. And actually, we can put together what we think your business is valued at. 95% of small businesses feel that their business is worth more than it really is. But then some of them that are losing money and thinking about closing down and shutting the doors and liquidating, some of them think their business isn't worth anything at all. Whereas there are a lot of intangible assets that might be good for that particular business if it's sold and either implemented with another business. It could even be opened as a separate location. You could be selling only for your customer list, for example. It could be a favorable list. You could have some federal debt that is desirable and actually offsets the cost. Yes, you could have a COVID idle, the economic injury disaster loans that were so popular in 2020 and still has 25 years term left on that 30-year, 3.75% loan. And, those are assumable through the SBA taking the right direction. So really, the one thing I really want you to do is look at your valuation of your business and value it and see what you think it's worth at this particular time. It's always a good time to do that. And maybe not at mid-year. Maybe you do it at the end of September. Maybe there's other pressing matters that you want to look at. But really, and if you wanted to sell your business, look at in this instance. And this is one that we have actually had success with. Really, it comes down to working with an SBA loan professional who is used to doing these or is not afraid to try them. But there is an instance where a client can buy a business for $0 down. Yeah, it's possible. I've seen it. The owner must be able to carry back at least 25% or more. But I'm telling you, every owner that I ever talk to comes in and says, yes, I want to sell my business. And no, I don't want to carry any money back. In the majority of those transactions, the owner does carry back some of that cost, if not a substantial amount of it. The key here is that the owner must carry it back interest only while the SBA loan is being paid back. This is in the standard operating procedures of the United States Small Business Administration. I read it years ago. We've implemented it and used it a few different times. So in this situation, what you're looking at is in my little ordeal here, is we have a business that's selling for $300,000. And in this case, 67% of that is going to be financed with a small business administration loan, most likely the 7A loan, maybe the Community Express, uh, maybe a different type of loan. The owner is going to carry back 100,000. And so while this loan is being paid back, the SBA loan over 5 years, the owner finance will only be paid interest only for that term. Then when the SBA loan is complete, then the loan can be amortized at that point at agreed upon interest rate. But this really works if everything is really solid in this business. And if we get into, buying a particular business, you're looking at, oftentimes a down payment. You're looking then at some collateral. So obviously you'd probably need some pretty good collateral in a deal like this. Your condition of the business is going to need to be good. It's going to need to be most likely a profitable business with cash flow and generating cash flow. And that would be historic cash flow that's documented off of an income tax return. And really, the other thing is the applicant needs to have good credit by whichever credit score, either of the two we talked about earlier. And also, you need to kind of then also have everything put together and have a willing buyer and seller and a bank that's willing to carry that type of transaction. But it can be done. But really, until you've looked at, and especially if you have one of those idle loans, um, and your business isn't doing as well as you think, and the business isn't going to be around for 25 years, look into selling your particular business, offsetting that debt through part of the transaction to make it easier for the buyer to buy and get on down the road. So that's our financial review. It is short, it is sweet. It is really, to recap the financial review, is to look at a lot of the assets that are available to you through the Vertical IQ program. And if you own your particular business, and if you do at some point in time want to sell your business, get a valuation, do a valuation or do several of them and find out what the value is right now. And maybe start that plan working toward actually selling your business. And there's actually a unique way of actually selling it if you find a buyer with no money to put down. So really looking at my fourth thing at mid-year that I would want to look at is I would want to look at my security and risk. And, a month ago or so, we did a wonderful cybersecurity webinar. And I know cybersecurity isn't your favorite topic, but it's a crucial topic. And I just can't get enough small business owners to listen to me. So I'm going to have to talk about it again. Cybersecurity, I mean, there are state-sponsored programs that are tearing it up out there. I run into quite a few people every month who have run into some type of a ransomware, have ran into a lot of different other cyber crimes, but really even ransomware for small businesses, small nonprofits, they're happening. I see them. And oftentimes that data is lost forever because the ransom isn't paid. So really understanding your security and the risks that you have. We talked a little bit earlier about some of the provisions of risk, some of the important things as far as the risk and the security aspect of it. But really, it's really important to note that risk and security are important. And really one of the things, and again, I'm going back with my plan again, and here we go. And this is a written information security plan. And these are kind of the new things, particularly with insurance companies. if you're trying to get insurance that would cover a cyber attack. But the written information security plan, and again, you can write this down on one piece of paper, but really what it does is it needs to have a few different components in there to give it some teeth. It needs some information security policies. And a lot of this, is pretty, high-tech jargon. It can be simple, it can be more in depth, but really what it nearly comes down to is protecting yourself and your particular business. And I'm going to just kind of jump through this real quick. But the written information security plan has several elements. It has an information and security policies portion of it. With that section, you really need to talk about the organization's security objectives, your scope, your principles, and guide its information security practices. Last month when we had our security experts on, it was mind-boggling the information that they talked about. And you can go to YouTube and find that. It's on our YouTube page. But really, they were just doing a little bit of a cruising, surfing the internet, and they came across a business that actually had, 50 or so employees, if I recall. And all of their information, including social security numbers, was accessible to anybody on the internet. And you might recall the story, if you heard that, is that they called the company and the company thought that they were cyber criminals when they were just saying, no, 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 we're US veterans, and we have our business and it's cyber security. We're just telling you that we went and opened up these files very easily on the webinar, on the website. So really looking into a lot of your security policies and just having a quick little 2-pager on what you do if there's a security risk and to avoid it, getting the roles and responsibility of the team members and grabbing that control and accessing measures to protect the sensitive information from unauthorized access. And also, your data assessment and management aspect of that is conducting a risk assessment to try to find out just exactly where the security risks lie and jumping into it and in the roles and responsibilities, your data protection. But what you want to end up doing is involving key stakeholders, including if you have IT staff, management, legal experts. If you're one of those persons that's wearing all those hats, just put together something that makes you feel safe and you sleep better at night, that your information and your security is safe. And if you do have some type of attack, you can bounce back from it. If you're a bigger organization and you deal with specific industries like the defense industry, you do have to already align with some of the best practices that exist out there. So when we talked about some of the opportunities through border security and defense, you're going to be required to actually take these particular steps outlined by a variety of different organizations to provide that those controls are in place. So by doing that, it will ensure that the program has proven security practices and is compliant and actually relevant regulations that satisfies your customer. And that's really it, isn't it? Satisfying your customer. If you have employees, you just do occasional training on and understand the role and the information that they have access to, and that can be misused either purposely or non-purposely. You want to document and communicate. And, if you want to talk to one of our cybersecurity experts, we have a couple of different certified North Star cybersecurity experts at the SBDC, and just put together some type of little policy and plan or just get in front of something that helps you do that a little bit better. Okay, our last and final plan is going to be HR and marketing is what I would look at. There's a lot going on and, I like to defer the marketing to Maureen and others, great marketing consultants at the SBDC. But really, HR is something that we have historically looked at on Webinar Wednesday at this time of year. Usually the state of California is implementing a lot of bills, a lot of new legislation. It takes effect July 1. And oftentimes those include a lot of onerous bills that employers need to know about. Not so much this year. So really a lot of what we're looking at on the HR side of things, and really, it's not near as bad as from the state of California. I think a lot of the experts in HR and HR planning are saying what you need to do is you need to look at some of the federal things and the federal changes through the executive orders. And so one of those policies would be to go in and review your I-9 form. Your I-9 form is an immunization form that, excuse me, it's an immigration form that you must actually, since 1986, have your employee fill out on the first day of work to actually document that they have legal right to work in the United States. So obviously that is something that is getting a lot of attention these days with the current climate. And so really going in and making sure that your I-9 forms are up to date and current. The one thing is, if you have an employee from 1987 and it was filed with a timely form in 1987, there's no need to update that. That's fine. But you do have to make sure that the date on the form is not reached the expiration date, because a lot of those forms have expiration dates to where they need to be updated and they have a date that expires. Now, if you've signed and dated that before the expiration date, you're fine. If not, you would need to update. So really looking at your I-9 forms and looking at a few things, not to, we're not going to cover the mid-year HR changes just because they're not significant, but it's not, to say that I haven't done my homework for you. And one of the things we talk about a lot are the free human resource hotlines for employers. And here's the Central Valley counties, actually Central Coast, San Joaquin Valley, and Sierras and Eastern Sierra foothills, Eastern Sierras and the foothills are all covered here in a good part of this, mostly going all the way up to Placer County. So Monterey County is listed here. They did actually a nice webinar, and Maureen will put that in the chat box. If you really want more information on this topic, go there. They talk about the I-9. They talk about DEI and what you can and cannot do, or maybe it's not you can or cannot do. It's what you should or should not do, or what you can do with in that particular area and kind of walking that tight line. But it also demonstrates some of the other changes that are happening, not only on the federal side, but on the state side. So really jumping into this, and I did grab a couple of slides that just to show you and to kind of update and make sure that you're current and what's going on. Again, this is the free hotline, so you can call and ask questions at any time based on those numbers. On here, they had a number of different programs that they highlighted, and this was their mid-year labor law update. It was done by the Monterey County Workforce Development Board last month. And so it's about 3 weeks old. I thought it was excellent. It covered everything that's out there today. Really go there. We're not going to do a program on Webinar Wednesday. Theirs was absolutely outstanding. So one of the slides that I did capture during their presentation was a reminder on CalSavers retirement. CalSavers is the retirement plan. We talked about it a lot 4 or 5 years ago. But actually now is the deadline coming up at the end of this year for employers with 1 or more employees to register. Those that only had 1 employee can wait all the way till this time to enroll in CalSavers. And if you recall, CalSavers is for those that do not offer a qualified retirement plan, and they must enroll employees. The employees can opt out, but it has been phased in since I believe 2021 based on the size of the employers. So the big employers first. So it was always based on the number of employees you had. But the last deadline is coming up. So it's for those that don't have a retirement plan. There is no requirement for employers to add or to contribute to it, but there can be a payroll deduction which the employer owns and takes with them and is remitted to the state and remains in their account. So they can start an employee a retirement savings and it's under this CalSavers ban. So that's kind of timely coming up at the end of this year for you very small ones. Also, mid-year, there's no increase in minimum wage, the state minimum wage, $16.50 an hour. or the actual fast food minimum wage at $20 an hour. However, it's effective July 1, 2025 for many or most healthcare facilities. There is an increase for certain wages. The minimum wage for healthcare workers was $18 to $23 an hour. And, you know, that is pretty much out there. The one thing on the minimum wage that, we don't talk not near enough about is the salary exempt minimum wage. And so if you have a salary person who you pay, based their salary exempt, so they're exempt from overtime, and they work at least 40 hours a week, or maybe they don't have to work 40 hours a week, they can work less. But they are required to be paid the salary exempt minimum wage, which I don't have in front of me, but I believe it is around $68,000 per year. In healthcare, that jumps to about $86,000 a year. So before making somebody's salary exempt, you want to make sure that it is the best situation for you, because if you have a salary employee, it's kind of met by those demands. And even then, the fast food salary exempt wage is high as well. I think in the 80,000 range. So that's the minimum wage to do. In California, we have the Workforce Violence Protection Plan and Staff Training Requirements. SBDC has our Workforce Violence Protection Plan. But also it is required to be updated on an annual basis. And so also there are staff requirements there and staff training that needs to be considered and taken care of. But also, who knew that you had to develop a heat illness prevention plan, both indoors and outdoors? So I guess for warehouses that aren't cooled, that they have to have a plan and they have to make some accommodations. If the temperature goes up a certain point, I believe over 82 or 84 degrees. So, and then also the CalSavers deadline is coming up. So again, many of these resources are in our YouTube, our CSUB SBDC YouTube. You can go there and subscribe. I believe we're approaching 500 subscribers. You'll see things like the family succession planning that we talked a little bit about. We talk a lot. There's been a number of artificial intelligence. You notice I didn't bring up AI. AI is something that you definitely want to keep your eye on, but didn't bring it up in this particular instance. Again, to contact us, for confidential, no cost obligation with our expert, fantastic consulting team of advisors, contact us at csubsbdc.com. Sign up at our website. We'll contact you to arrange a consultation. After you sign up, no obligation whatsoever, absolutely no cost or fee. Again, we're part of America's SBDC programs, and let's jump in and go into the chat and see what Maureen has in store for us today. A wonderful greeting. Yes, good afternoon. Little bit about signing up with our YouTube and things like that. The succession planning, the cybersecurity threats, and also this webinar we just talked about through the Monterey County Workforce Development Board, mid-year update from the California Employers Association. That is right there. So we do have time for a question or two. If anybody's got a question, gladly take any question that you have right now. If not, hey, it was fun. There's our mid-year review. Remember, plans don't have to be elaborate. Be flexible, work with what works with you. But you had some ideas in January. Let's revisit those now and see where they've gone. And maybe you have more to implement the last half of the year. Okay, for our producer, Maureen Busher-Dang, I'm Kelly Bearden. That's going to wrap us up for Webinar Wednesday number 351. We'll be back for Webinar Wednesday number 352 real soon. Everybody have a great week out there and a great last half of 2025. Bye-bye, everyone.